All right, ladies and gentlemen, thank you for showing up here today. I know I'm getting the stream started a little bit early, right before we have earnings release. So market's still going on here, so I can share my screen really briefly. But as we all know, with the earnings call, it's going to be 5 p.m. Eastern time, so 4 p.m. my time. So that's in about an hour and 15 minutes. So yeah, I'm just glad to cover the earnings live. I just like doing this because it gets my raw reaction. I can see in the chat how people think about it, especially if you've been paying attention, at least in the short-term price movements and the daily charts. You'll see that, well, even today, right, Palantir touched into the $20 range at some point as we opened up. But regardless, we're going to talk about Palantir, how they did last quarter, right? So we have a little fresh mind here, right, when the new earnings come out. So let me just get those pulled up for us really quick, making sure this is live correctly, because I don't go live too often here for you guys, so I'm just glad to do this. Yeah, just let me know in the chat. Okay, I see everybody here. Love to see the chat blowing up a little bit. Let me see if I can get this shared with you guys. About the chat too. I know I'm not too good and coordinated with the chat here, but I'll do my best to make sure I do that. Everyone, let's just say hi to everyone that's in the chat too. Kurt, Matt, wow. Yeah, thanks for joining early, guys. I know I put the schedule out for 3:30. I figured that's when the earnings are going to come out, the highlights. I know it's a little bit before the earnings call when it's at 4 p.m. Eastern time, or sorry, 4 p.m. Central time. So we have a bit of time here to make sure we have a fresh mind, like I said, for Q2 earnings. So we'll go over the Q1, kind of the big major highlights, and I think that's going to carry over, honestly, especially when people are going to be looking out for that revenue number. So let me get those pulled up here. Wrong one. Awesome. Yeah, and talk amongst yourselves too. I know it's pretty exciting stuff today. We're almost hitting market close. We're basically at the high $23 range here. If you were paying attention this morning, though, like I said, it's very volatile. Not just Palantir, of course, the whole market across, especially for the high multiple stocks. And Palantir obviously falls into that. So if you were even watching earlier into the week, we were like, oh, $28, $29, like kind of interesting stuff, since we haven't been in that range for essentially a couple years. But looks like with the overall market pressures too, and then you never really know how the excitement's going to go, depending on how they do against expectations for the earnings coming out today. But everyone's going to keep in mind right now multiples, and then thinking about how the Fed thinks about what they want to do in the direction. Right, people are always talking about rate cuts, and that helps companies actually that maintain a high multiple. However, if they don't believe that's going to happen, that's also going to hurt in the opposite direction. So a lot of this game is about expectations, not necessarily when it actually happens, right? So just a very far off future. If they were to cut rates, most likely we've already priced that in at that point in time, just because Jerome Powell likes to be very I would say he likes to be relatively forthright in what he wants to do. And I think that's the name of the game when you're dealing with such a high macro level of the economy, right? You don't want to just do something out of nowhere. At least responsibly, you shouldn't be doing that. So we'll see how people handle it, right? And I know everyone's got their own kind of opinion on how that's happening. All right. Oh, just taking a brief look at the chat here. We got people from Amsterdam. Yeah, I know it's a little bit later for you guys there, so it might be easier. Technically, it's still working hours here in the United States. Oh, January. Oh, $30 calls here. So you have some time on those. You have a few. And just saying, right? Technically, we were basically almost touching at that point. Not that we went into 30, but it the way that people price the options, especially when that price has been recently hit, it does affect the probability of that happening, and it does get priced in there. So but yeah, let's just get into the Q1 earnings, and I'm going to just try to refresh this as much as I can, just to make sure that I don't miss when Q2 comes out. But we do have the webcast call, and for those who are just joining, thanks for coming. I know I don't live stream too often, but I do this on a I'm just doing this on a quarterly basis, essentially, with the raw reactions. And what we'll do, essentially, the agenda for today is we'll talk about Q1 or last quarter's earnings, kind of get us fresh into the head there. But then when Q2 comes out, it comes back a little bit after hours once the market closes at 3 Central Time. It does take a bit of time though, just for that stuff to refresh and get available. But we'll cover that. And then when the call starts, we'll listen in. So I'll shut my mouth for a bit. I'll take notes. You guys can do whatever you want. And then after the call ends, we'll talk about what happened, right? And we'll essentially look at, how does the market react to? And I know a lot of people are wondering about that today, especially with the last couple days. By couple days, I mean Friday last week with the huge drop, as well as that continuation into this morning, and then the somewhat recovery for a lot of these high multiple stocks. So yeah, exciting stuff today, right? And what timing for Palantir to be doing this for their earnings, right? It's not like they knew this was going to happen, right? But it's just interesting that this would be the day that it happens. So when the market turmoil is happening, at least at a macro level. So yeah, refresh here. So actually, time's flying by. In 2024, it's Q1 came out, so that's earnings up to March 31st. That information came out on May 6th. So just so people know, it's already almost a month into Q3, but we are just going to cover when the earnings come out up to June 30th of this year. So last quarter, I think the biggest story, and everyone talks about profitability. It's like whatever for me, honestly, as long as they maintain it for S&P eligibility, which I know a lot of people are looking forward to. But the big thing, honestly, was revenue growth, 21%. So yes, it doesn't sound fantastic. Doesn't sound like the 30% promise from years ago, basically years ago at this point from Dr. Karp, which is kind of funny considering how much time has passed. But 21% does show a turning point from Palantir, because if you guys remember the past few quarters beforehand, they were growing in the high teens, and that was not cutting it. And the price honestly reflected that. And even if we do a quick look back in recent times, the interesting here, let's do year to date. You can remember this was how the beginning of the year actually was. Right? I think people have gotten used to the $20 range again of Palantir, but all throughout 2022 and a lot of 2023. So 2022 was a single digit year, but 2023 also, we were basically in these teens point, right? And there was a lot of discussion still on, do they even deserve this valuation? So what I think was the big catalyst changing this, and this was actually before the first quarter earnings on May. This is for the Q4 earnings of 2023 when we have February here. And that kind of started the momentum, let's say, for Palantir hitting and actually maintaining this $20 range. And there's always still going to be discussions because it's a growth stock, right? So people are pricing in growth. Yeah, we still have under $3 billion. Under for full year, right? I think under $3 billion of revenue. And then they're being priced at, say, $40-50 billion at a market cap. Now, the expectation is that they're going to accelerate their growth pretty fast to justify that. And profitability-wise, yes, you can, once they become a very, very mature company, sure, you can talk about that. But the narrative at the beginning of the year really is that, even beforehand, is that revenue is growing back again. Now, the funny part about the revenue acceleration, I guess you could say, or the return to growth, at least specifically for Q1 2024, is that it was actually from a lot of existing customers. So if you're talking about the narrative and you're talking about AI and AIP boot camps working, technically you can make an argument that this is not necessarily the quarter to show this is the turning point. And a lot of people, and I mean for myself personally, I believe that's the point that we still need to see, or at least to prove at a much more, I guess, basically prove it in a way that there's no doubt, right? Or at least way less doubt. So right now, people could still make the argument that, existing customers is the main reason you're growing revenue. and we'll look at the charts too on the presentation. You'll see like, yes, there is new customer acquisition, which means that they do technically get revenue from them. But it's not like the acceleration that you would expect when you're talking up that the pipeline is really building up. Now, if we're talking about boot camps, which is, let's say, a higher level at the top of the funnel before customer counts, because you're not necessarily signing a deal, but maybe you're getting close to it. I mean, that can be a proxy. We just don't know how accurate that is because we don't have conversion numbers, just raw numbers on what they did. Now, I've been talking a lot about revenue and a little bit talking about customer count. Now, the other thing that people pointed out last quarter for Q1 is the expectations of growth. Now, that means of course, there's going to have Wall Street analysts have their own kind of 2 cents to it, but also what does Palantir's management themselves think about this? And I think, at least for me, for a long term, kind of you just care about the fundamentals. Everyone's going to be all over the place on Wall Street, and you're going to have the Dan Ives, you're going to have the Marianas, but you're also going to have the other analysts, and I don't want to say their names, but Rishi comes up, RBC, and then you think about kind of the bandwagon analyst that I covered in the last weekly video. I talked about Citibank. I talked about Citi specifically, but it sounds like a lot of analysts are kind of, they don't want to put their name out there saying I'm a full-on bull, because technically, right, and when days like this happen, they feel kind of vindicated. And by days like this, I mean days like this when the stock is going down, right? And you can see this downtrend from the highs that we were at recently, or 52-week highs. So, it's going to be all over the place. And honestly, if you're a longer term shareholder, I'm not talking about even just a single year. If you believe in the narrative of Palantir, that's not a narrative that's going to play out. Well, maybe it plays out in a year. That'd be nice. But in reality, that's a multi-year kind of expectation. So, and I know a lot of people that follow this channel, at least for Palantir Research, we're not necessarily in the traders bucket. There's probably some people, obviously, that have a core position and maybe they play some options. Like, if you're going to pick up some shares, if it gives you, right, you'll sell a put, right, once in a while. Or if you're feeling kind of awesome with the short term, and maybe you think that it's very, very overran, you might buy an occasional put, even though you still have your long position. So there's no right or wrong way, honestly. It's just what's best for you, right? And everyone has different risk tolerance. Even not owning Palantir technically can be a risk to someone, right? It just means it's the risk of not taking on risk. Therefore, your returns can be dampened. But for most people, individual stocks, honestly, is not their forte. And if you have your job, you'll make more money just developing your career. So. Oh, and I feel like I'm ranting a little bit here, but I do like looking at the chat. I am trying to do better this time in following you guys. Thank you all for joining. I do see a few familiar faces, as well as some other folks that I don't see all the time. I don't live stream on the regular. Now, market close. Oh, yeah. So this is the big question. How long does it take to release? Sometimes they're pretty good about it, but we'll see. And I'm just going to keep on refreshing here just so you guys are aware. Sometimes the Bloomberg terminal does release it a little bit faster, at least on the headline side. But yeah, nothing yet here officially on the Palantir website. But I'll try to keep an eye on the chat too for when it actually comes out. If you guys just need to yell at me, that's fine. Yeah, so I know a lot of people are just worrying about when it's going to be released. And honestly, we might even be able to see when it's released technically if we see a huge change in the after hours kind of activity here. So market has closed 3 o'clock Central Time for me. We closed above $24. So, for some people, that means we're still in that range, actually. And if you look at a long-term look, we technically still are in this range here, right? And, for some people at recent times, this has been a level of support. But I'm not a technicals guy, just so you guys know. It's not my forte, but I do like to follow the company, the narrative, and follow the financials. So what are you looking at? Palantir shorting up or down? Well, we're going to see, actually. So in the after hours right now, we're already seeing some activity here that, up 1% or 1.5%. But I don't think that's any indication yet if someone's gotten the information. But, if they're running up here, it looks like we're trying to hit it almost up into 2. We're at 24.60. Kind of exciting stuff. Unless someone has the inside scoop, that's actually a reality that I don't have for myself where I can get the information. But in the meantime, Just shout at me, guys, if I miss it here, but just let me know if the Q earnings are out. So on the highlights here, I was just covering revenue a lot. A lot of it, honestly, I believe the euphoria around last quarter was because they're above 21% or at 21%. But the other thing was actually guidance, and guidance was actually showing on the top end. So if you've seen my past couple videos on the expectations, it looks like if they are to hit the top end of their quarterly guidance, then they'll be in the 22% range. Now, obviously that's not out of the park amazing, but as we've seen, Palantir has exceeded their own expectations from the guidance they gave. The 21% here that they had for Q1 2024, so back in Q4 of 2023, actually, I believe they, I believe they were actually, sorry. I just got a notification on Twitter. Palantir just did, okay, let me just see if it's on their website now. Yeah, sorry, I didn't finish my thought there. But essentially, guidance, they did better than their guidance that they gave last time. Let's just go into Twitter. Or, sorry, X. I still catch myself doing this, so. Oh, I'm not signed in. Let's see if the price is going crazy. Wow, there we go. People like this. 27, back to 27. So up 3%. Now I gotta see the numbers. This is always exciting stuff. Not even just because if it's like good or bad. I just want to see what happened. So we've been waiting. We wait every quarter, right? After the first quarter ends, I'm already ready for the next one here to see how they're doing. And technically they have a month of operations for Q3, so they have some idea if they're guiding out. So, all right, let's start from the bottom here. Just a minute ago, Palantir generated $678 million in revenue in Q2 2024. That's a $25 million beat versus the analyst estimates of 652 to 653. And like I said, if they were hitting for the upper end of their guidance of 653, that was 22%. So they've obviously exceeded that at 678. And now they expect $697 to $700 million in revenue for Q3 2024. That is awesome. Now this is much higher than I was expecting, and I didn't expect them to beat their own guidance by this much. This is $25 million, and they outperformed the analyst estimates, of course, that they're mentioning. Our business has never been more profitable. Yes, that's not hard to believe considering their GAAP profitability. They generated $134 in net income. Now, last time they generated how much? I believe we have it here, $106 million. So that's an extra $28 million from the previous quarter, so not quarter over quarter comparison. U.S. commercial revenue, 70%. Now, this is revenue. This is awesome, guys. I like to see this. Now it's flowing to the numbers, and they have an 8% quarter over quarter in growth for Q2 2024, excluding from strategic commercial contracts. And then finally, they're raising their guidance to $2.742 billion to $2.750 billion. Now, it's nice to have these up here because last time for the full year, they had 2.677 to 2.689. And yeah, looks like they raised it above here. And they wanted to point out specifically above the midpoint. Yeah, so this is still above what the analysts are expecting. These are great. So basically, they outperformed on revenue. So that's awesome. And they beat their own, of course, estimates and analyst estimates. So that means, and that means they exceeded the 22% that they were mentioning. I'll calculate it after. But 70% for the revenue of commercial. This is U.S. commercial, though. Just remember that. So when we see the full information on the revenue, we'll see how much it is getting offset by the international commercial revenue. But regardless, 70% for a specific segment like this, especially the one that you're focusing on and telling everyone the narrative is about, that is amazing. So great job on Palantir management for doing so. Let me just make sure I refresh this. There's probably going to be more threads. Okay, so the last one here was the guidance. Now, let me just double check. We got this. I guess I'll take a second here, but I know it's definitely much easier for them to post up on the Yeah, I'm just refreshing here constantly. I'm sure everyone else is doing the same thing on their website, but I'm glad that this is actually kind of cool. I don't remember them doing this last time actually, but they might have done it, but it must have been maybe a bit at the same time as when they released it. But regardless, these are great numbers here. So 678 in revenue, Q2 2024. So yeah, honestly, that's higher than I expected. Let's just see if I have that number here somewhere. Yeah, just like getting the comparables here. Quarterly result Q2 2023. I always have to. Revenue 533, so 678, 533. Let's get a quick calculator. $678 minus 533. 145 divided by 533. 27%. Oh my gosh. We are almost back at 27%. So we're up at 27% quarter growth here, or comparable right now. So that is definitely an argument to say that they are approaching 30%. Now, right now, we're still at 28, so this is awesome. Stock's up almost 17%. So obviously the market likes this. Now, there is an argument to be made here still. You got to play devil's advocate from time to time, right? So I'm sure a lot of people are excited about this, especially for the short-term players. If you've got if you had some options and you were very bullish on the stock, especially when you saw during the day today, right? I mentioned this earlier that we technically hit into, I think, the $20 or at least $20.90. Either way, deep into the 21s after being in the $27, $28 range the past few. So right now, getting this catalyst, essentially, I think the big thing right now everyone's going to see is that profitability is still going up, yet the revenue is going up. Like I did in the calculation just now, 27%. That is unbelievable. I'm very happy about that, honestly, and it makes me much more confident now. Seeing this, I am curious though about the customer numbers though. So is it some sort of expansion within their existing customers? I'm not sure if that's the case. There could have just been a delay in new customers that they've been accumulating since the boot camp started late last year. So this is exciting stuff because now we've got actual numbers down that, it's not 30%, right? Technically, but if you're trending up from 21 to 27 in a single quarter, and I just thought of just now the API usage too from Microsoft, from Nadella, Satya Nadella, that maybe we're going to see something there. Is it going to be, are they going to bring this up as themselves? Are they going to bring up this point themselves to the API usage? Because that is a very attractive offering, you can say, right? So how are you going to use an LLM securely, right? And then you can call it through Palantir. You got to just, you're going to call it through there. You can leverage it with the ontology. So that means you now have your data as well as the relationships between it, and you're able to use it securely and safely, or at least with a lot of confidence that it's secure and safely, that you can actually use AI and not feed these outside companies with your own information. And they use that stuff in order to improve their own modeling. So I'm not sure if maybe I'm the only one who's not seeing the new stuff. I'm sure it's got to be somewhere out there, but let me double check the news. And let me just go to Google. There's probably a press release somewhere. Palantir Q2 2024 earnings. And if I talk to myself when I type, it just helps me. Okay, so we got the tweets coming up, the X post coming up. We got a Bloomberg article. Oh, thanks, Redneck J Dog. I appreciate the comment here. I try to get onto the live stream when I can. It's at least for the quarterly earnings, it's exciting stuff. And it kind of worked out with my work schedule being in the after hours. If it's in the pre hours, it can spill into working hours. But in after hours, I can plan accordingly. Let's just say that. We got a Bloomberg article here, right? Let's see if we could do BNN Bloomberg. Yeah, for those who want to know the free version of Bloomberg, there might be a slight delay in when they get out stories, but B&M Bloomberg, I believe, is a Canadian site, and usually you can get the articles for free. But I know there's typically a delay here. Let's try this one more time. Ooh. Okay, so I'll keep an eye on the chat though, guys. Let me know if you see something anywhere else posted. But on Palantir's website, at least, I'm not seeing the information yet. Still glad though that they did this. And just doing another double check on Palantir's X page. Yeah, so it looks like this is the. Oh, I guess I missed this. The Business Wire PR. So yeah, these are typically a little bit faster when they got this. Let's zoom in a little bit. Wow. Okay. So the headline here, I mean, I would do the same thing. Got to show off that revenue growth, 20%. That's delicious, right? And then we got the GAAP profitability still maintained. It's nice that they keep it going up slightly, right? But honestly, just keep on staying positive. Keep your S&P eligibility. That's the big headlines here. And this is obviously what management wants us to see first, right? But we still got to look at everything to make sure it kind of lines up. And, you know, there may be some dark spots that we haven't seen yet. So it's 7% quarter over quarter. That's the consecutive wise, but $678 million. They are possibly going to hit a $700 million quarter next quarter based on their guidance, but that's on the top end. Now, U.S. commercial, this, of course, is the second bullet point because this is their bread and butter at the moment. Revenue grew 55% year over year, and then 6% quarter over quarter to 159 million. The customer count grew 83% year over year, and then 13% quarter over quarter to 295 customers. They just knocked it out of the park. Actually, I was not expecting them to hit it this high for the specific U.S. commercial customer count. So you know what this means, right? Even if they're not big contracts today, if Palantir can prove themselves, they show the value that they can have, and customers want to expand, then, you know, this is basically saying that down the line, we can expect some level of growth. And based off history, we know Palantir has a sticky solution, not necessarily vendor locked because, oh, we're going to hold your data hostage, right? It's more of, oh, this actually works. We can see some insights here. Let's expand this to this. And then you make more money because you're able to expand your usage of Palantir. Now, if that return on investment is consistent and the value proposition is still there, then why not? And we saw that actually in last quarter with the net dollar retention. So I got to look for that. If they provide it here, probably not. Actually, I'm curious if they even... No, of course, they're not going to put it here. But typically they hide in a very, very tiny print for net dollar retention. So when the presentation is out, we'll look at that. So U.S. government revenue, 24%. Now, this I did not expect at all. 20% growth for U.S. government. Everyone knows it's the lumpy side of things. And even if it's not fast growing, it's already a big bucket. So if they can keep it consistent, this is amazing, honestly. So honestly, I'm not surprised at this 18% jump here. Now, granted, technically we were in this range already beforehand. But with these numbers that they're showing now, there's a little bit that much more justification on growth coming, because growth is literally coming, as you can see here. And if I'm repeating that phrase, I'm get your mind out of the gutter, but you know, I just saying it out loud is kind of funny. Now, this is just super exciting, that 24% here. Now, commercial revenue. So here's where we see kind of what happens. Commercial revenue grew 33%. Now, keep in mind, this is when U.S. commercial grew 55%. So international is still not their forte, right? And then government revenue in total. So it's actually pretty close at 23% versus this. So international government doesn't seem to be slowing down for them. So that's actually very nice. 27 deals over 10 million. Now, this is a very interesting metric they pointed out. I don't know if they usually point it out. Last quarter was 15 deals, 10 million. They almost doubled this. I can't believe this. There's a lot of highlights here that people are going to enjoy. And when I make the quarterly video, you guys are going to, I'm going to be covering a lot of different stuff here. Customer count overall. So this should be commercial as well as international as well as US commercial. So yes, it's still technically smaller than the 83%, but golly, for the whole customer number to grow 41%, that's great. We pointed this out. This is in the headline, $134 million. And GAAP income from operations, still great here, meaning they make money even without the interest. It's nice to get that extra interest for the treasuries, but it's not necessary because they're actually making money from their business. And this is what I pay attention more to if you've watched my videos. Now, adjusted income from operations, still great here. Healthy margin of 37%. Rule of 40, 64%. I believe they were in the 60s already last time, but let me double check. Oop. Oh, I should use this. Yeah, rule of 40. 57% last time. So they are continuing to increase. Oh, that makes sense because it uses their revenue growth. So that obviously went up a few points. And then also their adjusted operating margin. So these are both doing very well. So this, of course, should be going up. Now, let me just do a very quick check if they have their official numbers on here. They do not. And then Palantir should be doing their live stream at 4 o'clock Central Time. Yeah, so nothing's on their YouTube channel yet, which is fine. We got plenty of time to look at this. GAAP earnings grew 500%. Well, of course, it'll be 500% when you have a low baseline. Adjusted EPS grew 80%. Great. Cash equivalents. We've hit the $4 billion mark officially. And then a lot of that will be sitting in treasuries. Now, cash from operations, still positive here, bringing $100 million. Honestly, these are great earnings. I'm very happy with this. Obviously, people are still going to argue, oh, if this, you don't know, right? But the trend is showing that from 21 to 27%. So that means next quarter, we have to see a continued increase in the growth rate. So maybe that can be a factor. But honestly, they're already proving to themselves that they can turn around the growth. Now, let's look at the numbers so it's a little bit more concise and easier altogether. Now, here's the financial summary. So 678 showing that 27% income operations all together here that we just went over. Now, outlook 697 versus $701 million. We talked about this here already, that this is an increase from the last quarter. Let me just do a percentage just so it's a bit nicer. So let's just do the top ends of each. 2.689 to 2.750. I believe that's it. Great. So they got a 2% increase, and this is for the full year 2024 revenue. So any increase, honestly, is good in my books. It means that they're seeing, at least management is seeing, and you have to keep in mind, they do have one more month of operations, and they, of course, can forecast forward for the rest of the year. So they have confidence in raising the guidance. Obviously, it's not out of the park here, but 2% on a couple $2 billion still does add up here. Now, let me just look at this. This is the 697 to 701 million. So that's for Q3 of 2024. Now, if we're going to look at, let's go here. I'm just going to look at Q3 2023 just for the quarterly comparison. And you guys got to remember too, just while I'm navigating here, technically this is after hours. So if this maintains, so it looks like we've cooled down just a bit. I remember being up 18%-ish, but back in the 28s. Very exciting stuff though on a nominal basis, right? If you're looking at $4 per share, right? And if you're depending on what kind of options you have there, not sure if that was being priced in with the dramatic drop earlier today. Now, let me take a look here for Q3 2023. We'll just do top end, just because it seems that Palantir, even though, I mean, it sounds like they like to make sure they can beat out the guidance that management gives. So, I mean, they've been continually doing this. So revenue grew 17% year over year to 558 million. So let's do 558 versus 701. Okay. 58. Ooh, okay. So on the top end of things here, so they're guiding for, if they hit $701 million, they're going to grow year over year 25.6%. Now, so based off at least the initial market's reaction, they don't care about this. It looks like they're more about they actually maintained and increased their customer count by a very wide margin, larger than I thought. And the other kind of surprise was government growth. 24% was not expected. I don't think at least for me, it wasn't expected at all. And 27% for that overall revenue growth. So I think for now, people are still digesting, but I'm just saying next quarter, the comparable is not as good as what this is. But you can always make the argument, as we've seen, Palantir, they guided for a 22% revenue growth, and yet they came in at 27%. Now, if they're going to guide for 25%, I'm not saying they're going to beat it over by the 6% difference there, but that would technically be into the 30% side there. And obviously, I would rather have management be prudent. As a longer-term shareholder, right, there's no point in talking up your game. Just do it and prove it, right? And honestly, I think that's what Palantir likes to do in these cases. They keep their it seems like they're keeping it muted. And then right when we come into earnings, the exciting stuff happens here. 27%. I still can't get that out of my mind. But yeah, so the guidance, honestly, I think it's still good because at least in relation to the previous guidance, it's still going up. Now, this is still under the assumption, though, that they outperform this because that's the track record they've shown. I wonder if the letter is available from Dr. Karp. Letter to shareholders, Argus 5. Oh, actually, if this is available, this means... Yeah, there we go. Okay. So it's a little bit cleaner since it's going to be on the website here, but let me double check if they have their presentation out yet. Yeah. So it looks like on the quarterly earnings portion of their website, it doesn't update as quickly, but at least the PR side, so I know it slowly revels in, but maybe there's a link to that. But I'm just going to continue on this one if you guys don't mind, since it's just better to... I just prefer that format instead of using the Business Wire one. Cool. Awesome. Now I'm going to take a quick brief look actually at this. So we covered the highlights. So before we go a little bit further on the... I'm sorry, I keep jumping around. But before we keep going down here and we can look at the nitty gritty... let's see. Okay, before that, I want to look at the CEO letter because this is kind of interesting stuff as well. Karp sometimes just overlaps with what he talks about from the earnings, so they might just focus on revenue again and customer count, but it sounds like maybe there's something else in store for us here. The playbooks of the past are no longer working. Okay, so we're going to go some philosophical here. Enterprise software business has for years been crowded by companies whose principal innovation was selling a product that was capable of a little more than reincorporating and shuffling data around in what amount to yet another storage system. Yeah, that's not a natural way to say things, but okay. A premium was placed on developing software products whose principal purpose was to sell themselves, and the perception of value became more important than the value itself. The rise and the increasing sophistication of artificial intelligence capabilities have exposed the extent of dysfunction within enterprise software deployments. This was the era of thin technology and an abandonment of any real interest in results. Essentially, he's going to tout here that Palantir drives real results. So we know where this is going. Those companies, however, are now being swept to the side. They attempted to seize the culture and moral high ground at the expense of anything resembling a commitment to outcomes and society, not to mention customers have grown disinterested in their theater. And honestly, for some people who work in corporate America, or even not even if you're boots on the ground, depending on how the software is performing for you guys, and even if you don't have a direct kind of decision making in it, your feedback does usually, or at least your maybe not your feedback, but maybe the way you're performing is also a way that your company's management can see things are not working. So at least I've worked at a spot where I'm able to give some feedback, especially on visualization tools and on the back end stuff. When it comes to working with data, because I'm an analyst now. But let me know if I'm reading too fast. I just want to get through this. But at the same time, national governments around the world dreamt that the promise of economic integration would be sufficient to coax adversaries to the bargaining table, that a credible military capability was an, oh, here's a new word, anachronism that could safely be discarded. They too were wrong, and their miscalculation has had significant and lasting consequences. We have believed from the beginning that a singular focus on creating value for our partners is the only way to survive, succeed over the long term, and that the strength of dominance of the U.S. military must be preserved and defended. These beliefs, which should be commonplace and unremarkable, have today become radical and risky in certain circles of elite opinion. Yeah. Yet our business is growing at an exceptional rate because of these views, not in spite of them. So basically, he's saying because they are mission focused and serving the United States government and following that, right? Not selling to adversarial countries, but also even in the commercial way. We've seen them, I believe it's the Industry AI trailer, essentially being able to back industry that supports Western values, and to win in the economic environment that we are globally today. I think it does, it is making the argument that them choosing a side actually is better. Now, of course, you lose access to the huge markets of like China, per se, but they're not a consumer product anyways, right? We're focused on the enterprise. So it's just something to keep in mind here. And I know Karp will tout this, especially when the numbers are going to be as good as they are today. So yet our business is growing at an exceptional rate because of these views, not in spite of them. It has become unfashionable to concede that we live in a world of constraints, both ideological and economic, but we will continue to build software for the world as it is, not as we wish it might be. Basically, they're just going to continue doing as they're doing, and they're going to be pragmatic about it. I mean, that's kind of how I am personally too, right? Just do something that works. I mean, yes, there's a whole philosophical things, and maybe in certain lines of works, it makes more sense to have that background. And honestly, for Palantir, they probably should be choosing a side. But honestly, it seems like the forte is like, we do something that works. So. And that was all that it said there. Now, we generate $678 million in revenue, 27%. Yes, this is what he wants to tout. Re-accelerating steadily, as I pointed out too. Last time we had 21%, but we had a huge jump to 27% now for the comparables. Our financial performance, strong has been a lagging indicator of the character and momentum of our business. Essentially saying there's more to come. Obviously, he's not holding himself to a number here, but he's saying this is a lagging indicator of the character and momentum of their business. So that's a great way to talk about it without boxing yourself in, right? Now, our business has also never been more profitable. This is not a surprise, I guess, to anyone, generating $134 million in net income for Q2 2024. The largest quarterly profit in their company's 20-year history. Yes, that makes sense. And they just recently became GAAP profitable. For those who are very new to the company. But the steady ascent of our profit reflects unbridled demand for understanding the capabilities of our software. And, as an investor, it means that their business will stay around because they actually make money. They're not a software company that has to front load and, let's just say, put a lot of money into marketing to keep up the revenue growth. Essentially, with their fiscal responsibility, they're still seeing growth today. And that's amazing for a high interest rate environment because your excess cash, right, will get a return, right? And you don't have to take on something risky. Now, in a low interest rate environment, that can change the equation. But in the end, it still is good for you because you have options and you don't have to take on the risk of taking on debt, right? So if you were to take on debt for some reason, hopefully not for survivability reasons, you'd obviously prefer a low interest rate environment. But even if it was a low interest rate environment and you don't need to take on the debt, that's the big thing. You don't need to. They make money. And we're talking about GAAP profitability here, but also cash flow for operations. Basically, Palantir is well positioned, and they're showing that they're still able to grow while being well positioned. They're not relying on necessarily something artificial, and other companies have been known to do that, and sometimes it works, right? You just gotta get the customers now, and then later on you'll be able to extract that value later, but there's a risk, right, that they leave or you can't do that. So very nice to see. I'll try to not to stick too long for this, but our growth across the commercial and government markets has been driven by an unrelenting wave of demand from customers for artificial intelligence. The large language model that transfixed the world will only be capable of transforming the work of a multinational business or defense agency's operations if their power is unleashed within the context of an enterprise software system that has an opinionated view of the world, its idiosyncratic objects, logic, and physics. Models with trillions of parameters may be able to flawlessly mimic, what's this, Goethe? But without more, add little value to the enterprise. They have been born into this world without any sense of its contours or logic, or indeed a conception of truth or basic facts, let alone the collective knowledge and insights into the operations of an organization with 500,000 employees. Ooh. Sorry, guys, I got to catch my breath for a little bit here. We got the big words, and I'm trying to get through it fast because a lot of it can be a bit fluffy here, but I just want to make sure I don't miss something. The language models that have captured our collective attention have an ability to approximate truth. They are incredibly capable, probabilistic engines that nonetheless have little innate sense or north or south and struggle on their own to solve complex analytical problems. Such models are necessary but not sufficient. Something more is required. I think he's basically talking about the ontology here, and being able to leverage that, because you need to be able to have truth when it comes to these models. And yes, throwing a bunch of data at something makes sense. And the more data you have, right, you have more available, but it also leads you to have the possibilities of hallucination. They are wild animals whose power and capabilities must be tamed and harnessed, and this is the value proposition for Palantir. Our flagship artificial AIP was launched just a year ago, and it's already transformed our business. Q2 generated 159. So now he's going to focus on the United States commercial. And a lot of this is because of AIP, honestly, which was the turnaround point, I would say, when it came to their positioning in the market. Now, 159 million in revenue in the U.S. commercial market alone, an increase of 55% from the same period the year before. The growth rate was even more significant at 70% year over year when excluding the strategic commercial contracts and the persistent and unbridled demand for our software for an effective enterprise platform that makes artificial intelligence capabilities useful to large institutions shows no signs of relenting. And then we can see here the focus on U.S. commercial. Even if you look 1, 2, 3, 4, 5 quarters, this is 50% growth, right? 103 to 159, so slightly over 50% growth. That's very fast. If you're doing year over year, right? 150 to 103, so almost 50% growth here. Oh wait, sorry, Q1. Yeah, sorry, Q2 to Q2. I'm just getting mixed up with these different bars here. And then we have from the beginning set out to build software products that provide our partners sorry, I lost my track here. Structural advantage over their adversaries and competitors. We are not and have never been interested in marginal improvements or remedying modest inefficiencies. The right software, properly wielded, can and should transform an institution, and it is that ambition that has won over not only our existing partners, but that of an entirely new cohort. It may be easy to forget that only 4 years ago we had 14 commercial. Oh, I don't remember this fact. 4 years ago, 14 commercial customers. Nearly 300 now. Customer count in the U.S. market grew 83%. Yes, this is the other thing he wants to tout. Customer count and revenue growth. From 161 in Q2 to 295 in Q2 2024. Accounts for half of all their customers now. So this is still on the customer basis, just so you know. Account of customer, it's kind of a metric. It's kind of not. But technically they are revenue generating if you're in that metric. But you're counting one customer that spends $1 million a year, the same as someone who spends 100,000, just so you know. But it's still forward looking. The ascent of our business in the United States in particular is a reflection of the dynamism of American culture, the willingness of companies and institutions in the country to adapt and adjust when presented with new conditions. The U.S. government has begun awakening as well as the scope of the opportunity ahead. The past quarter, for the first time in our company's history, the trailing 12-month revenue in our U.S. government business, including defense and intelligence agencies, surpassed $1 billion. The terrain for every institution in the world that seeks to survive has shifted as a result of the arrival of large language models and their capabilities, our partners. Incorporation and deployment of large language models will be one of the most proxy indicators of national outperformance moving forward. So basically saying the West overall wins as long as we have more and more large language models being utilized responsibly, of course. And, that's kind of the pitch for using Palantir. And then whether other countries in the world adapt in a similar way will be a measure of their vitality and competence. So basically saying if you don't use AI as a nation, you are going to fall behind. And this is very, very macro scale to the business of Palantir, but it is kind of directly correlated to what they're doing for the US government, right? They're allowing the US government to use large language models in a way that will meet the criteria that makes them confident to use it, as well as feel that it's actually working for them, right? If you have the ontology here built around or built with the securities that they have, like, they have IL6, right? For classified information, how are you going to leverage that effectively if you're not going to be able to trust that the technology you're using is allowed or not allowed? Well, you should be the one allowing it, if it's even capable of keeping it secure. So nothing crazy here, I'd say, from Karp, and he didn't bring out any metrics that are not being highlighted. So he really wanted to hit home about the commercial count, the commercial revenue, the U.S. commercial count, and then the overall revenue growth, and their continued profitability gap wise. So great letter here. I think it covered the big points that everyone is worried about for the company. It was, it's the typical wordiness that we're used to from Dr. Karp, but I don't mind that. In the end, I just care the most about these numbers making its way through. Let me close out Q1 stuff here. I just want less clutter. And sorry if I have not been paying attention, but the webcast information is still here. We're at 3:40, so 20 minutes, I think, is the ETA for the... Okay, here we go. This is upcoming. Let me just do the notify me really quick. Notification on. We can keep this on in the background, but I don't think they have any music, right? Let's do a like. Preemptively like it, right? If you guys want to, you guys can watch it alongside me, because what I'm going to do when this is live, I'm going to mute myself. I'll be taking notes, of course, on what they bring about and reviewing the earnings still, and even prepping the video for later tonight, of course. But for you guys, you can just listen through here, or if you want to support Palantir, just be a viewer on their actual video as well. I'm not sure if that will make a difference, but just to have a lot of people sitting on their actual stream will be good too, and just more of a validity aspect. And even though it's not customers, right, they'll probably expect it's a bunch of investors like us, but it's still really cool to be able to support them, even in any little way. Technically, I bought a hat too, if you guys knew about that. I took some pictures a while back. While I was out in Europe, I'm like, oh, they just dropped the store here. I'm like, whatever, I'll just get it shipped to the house anyway. So I made sure to give my support where it is, right? The new business is going to be merch, right? So I'm just joking about that. But if they have 50% growth in merch, it's probably because, the hats look nice enough. So while we're waiting for the earnings to come back, just for anyone who's joined us recently, we were covering the highlights earlier at the very top here. Big headline is revenue growth 27%, commercial customer count 83%, U.S. commercial customers specifically 83% more. I'm waiting for specifically the presentations, because it's just nice to see the visual and everything, but still has not come through. But we're going to continue on our way down. And for anyone also interested, we covered Alex Karp's letter. He didn't put any weird metrics or something. I know some time ago he did revenue per employee or something of that nature. So it was just something to show how they're able to leverage the abilities of their employees and how they have very bright people and able to draw on that revenue at a huge ratio, right? And then and I also talked about the Q3. So just so you guys are aware, the big number here. So they increased their yearly full year 2024 guidance 2% higher than Q. I know I'm mixing all these things, but this is 2% higher than the last full year guidance they gave from the last quarter. Now for this $701 million, so this is the high end. If they hit this is 25.6% or 26.5%. I have to double check. Higher than Q3 of 2023. The big caveat here is that Palantir typically has outperformed this, and we saw this in Q2. They hit 27% when they were guiding for 22% quarterly growth. So those are the really big things, and I think the market is reacting favorably. But let's double check. Yeah, they're back down to 15%, but oh my goodness, at one point they were up 18%-ish, back into the $28 range. We all know the volatility, though, happening in recent times with the whole macro market, especially when it's going to be higher multiple companies like Palantir. So that's kind of where we are. I know I got to cover a bunch of stuff. Oh, thank you. I just saw this recent comment here. Let's get some audience. I I know you complimented me, so I guess that's the reason why I'm putting this. But some audience participation here. So we have a lot of things. But best channel for Palantir, I appreciate it. Thank you for the support. There's a lot of great other channels too. I'm a one-man show right now, so I'm not the kind of group kind of person for now. But you know, everyone's doing a great job. Intelligence, transparency wins. Thank you. Okay, I appreciate you think I'm intelligent. But yeah, let's just move on then further down here to the actual numbers. So now looking at what's happening, and this is where we get to the nitty gritty. The headlines are always the sexy things that grab the attention, and it really is responsible for the market movements when earnings come out right immediately like this. But over time, things are going to not necessarily level out, but people will digest this information later on. And what I like to look at the top of this, when it comes to, we like seeing the revenue continue to grow up, but we like to see at what cost. Now, for Palantir's business and historically, this has not been an issue, honestly, and this has actually been a very strong point of them, their gross margin. So we can keep it simple here, right? So 426 divided by 523, or 533, so 426 533, that's 80%. And then 549 divided by 678. Yeah, 80%. So they're maintaining this. So the more business they bring in, it doesn't cost them more and more dollars. Obviously, if you have like a physical product business, right, it's going to, no matter what, there will be a cost of revenue. And it can be very, very sensitive to that point where it can eat into your gross profit here. Now, this is still maintained. 80% is great as a software business. And honestly, if it stays that way as they grow revenue, that would be fantastic. Obviously, the more the better, right? But I wouldn't necessarily be harping on them for any reason at this 80% range. Now, operating expenses. Now, this feeds into the income from operations, essentially saying your business makes money. You're not relying on, say, oh, let's invest in a random thing and then it'll return us money. And sometimes that works out for companies, right? You're essentially an investment company with your cash while your business still makes you money as well. But that can also bite you down the line if for some reason you don't have a profitable operation here. And then you have to rely on subsidizing that with outside sources. So Palantir's business makes money. Now, for increased revenue, right? If their revenue is going up here 155 million, I guess, or 145 million based off this. And then you're spending, let's say you increase your spending on sales and marketing by $12 million. That's not a big deal. Research and development, they've actually kept this pretty low for a company that is producing. It seems like they're always producing something new or at least some offshoot of their products, but up $9 million. And then $6 million for general administrative expenses. So yeah, no complaints here, honestly. Their operating expenses seem in line, and the growth of that in relation to the growth of their business is something to be happy about for me. And that's also why you can see this giant jump here from income in operations. This is actually kind of when they first started becoming profitable, I believe, operationally. I'm already forgetting now, Q2, when they had their first GAAP profitability, but that was actually on reliance of a a stepped up basis, essentially. So they weren't making money operationally at the time, but they were technically GAAP profitable because of that other income coming in. Now, the supplemental income is not any stepped up basis here, so no worries about that. The supplemental is just their cash pile offshooting cash, which obviously they have a lot of money now. We'll get to the balance sheet eventually, and we'll see that. Net income is still higher. Now, the driver of net income, it's not something else. It's not some financial play or lever that they're doing. It's their operations. Their business truly makes money. Now, let's go down further here. Now, this is the important part to remember too, and I haven't talked about it. And for me, it's not an issue. This is going to be different for a lot of other people. And it is something that you have to take into account that compounds over time. If you have an average rate of stock-based compensation or average rate of dilution to expect, that technically will eat into your returns over time, just so you're aware. So you have to note here with the I forgot what you call these, the little annotation here, but for number one, it's telling you which sections here have an inclusion of stock-based compensation. And this makes sense, right? They have employees. There's going to be a certain level in their cost that's cash being paid out, but also their stock-based compensation. And right here too, you'll see in all the other regular expenses. So this is not any weird stuff, but they have the breakdown here of how much of that include stock-based expenses as follows into the following. So $141 million. So this is still continuing to go up, as you can see. So it's not, so I guess this is the dark spot for a lot of people. But you can make the argument, right? If they're able to bring their growth back, is it because these employees feel that urge of ownership that it makes a big difference to them? Because if the stock does well for them, and Arnie, actually, if you guys follow him, he's really great at digging in. He found out those motivators essentially in the stock-based compensation to hit a certain stock price, or else it's not going to be really worth it to those employees. Note though, that's still a longer-term kind of goal, and hopefully that doesn't lead to any games down the line. But honestly, the truest way to reliably grow your stock price should be the actual growth of your business. Because if you have better revenue, you have better GAAP profitability, you can demand, and better growth rates, right? The trend of growing, then you can demand in the market, or the market will value you with a better multiple, because they believe you'll grow into it and grow even more, and it'll be a worthwhile investment. So that's just something to keep in mind. And I do forget to talk about this from time to time, but it's a real thing that adds up and compounds, especially if it doesn't go down. But what people will point out, and you'll see the charts probably on Twitter at some point, but essentially the ratio though of the stock-based compensation in relation to the revenue. Yeah, see, as revenue is going up much faster, this hopefully should be going down or maintaining in comparison to other companies. So you'll see that flying around. Now the balance sheet, this is always great. So for those who don't take accounting or have a little bit, this is a snapshot in time of where they're at, right? And just note here too, the comparable is as of December 31st, 2023 versus June 30th of 2024. So they're not comparing June 30th of last year, just so you're aware. Now, cash and cash equivalents, some people will say, oh my gosh, it fell down, but obviously they increased their marketable securities. So let me just do some quick math here. That's 319 million, I believe. So they're 319 million down in cash. However, their marketable securities in value is up almost 600 million. So yeah, an extra 300 million is coming here, but you have to also note there's more account receivables as well. So this is actually a good sign for a growing business. Obviously you don't want this to balloon up and get stale, but first, so cash wise, this is fine. Marketable securities wise, this shows that management is continuing to invest the money into treasuries. They're not putting this into other things, as we saw in those operating expenses like R&D, sales, as well as just general and administration for the business. So someone can make an argument, right? Oh, they're not going to grow their business. But if you're innovative, and as we've seen, the company has been releasing products, this is not an issue for me. I'd rather have them accumulate cash and be marketable treasuries and cash, and then be prudent about how they spend it for a very good return. Even if it's not out of the park, right? If you can spend your money on something reliable, and maybe will pay huge dividends down the line, not to be mixed up with dividends to investors, then I'm okay with this accumulation phase still, especially with the high interest rate environment. Now, net receivables, for those who do accounting as well, basically this means this is what is owed to them from their customers. So customers owe them more money, meaning that they are billing them more for their services, right? So that means this is a good sign here. Now, we don't have the age of these, right? So I don't believe these would be very stale. Essentially, if you have very old receivables where they owe you money, it's not really worth anything because you're not going to get your money. But either way, this is okay to see. And we know they're not cash strapped anyway, so it's not like there's some way that this is going to hurt them. Prepaid expenses, doesn't really matter. It's probably like rent and stuff. Property and equipment, I think that's probably under rent and stuff. Essentially, their assets are fine here. The main are these big three at the top. And these are not getting very small or ballooning. So, and most likely these will grow slowly with inflation, especially like if they re-sign a lease. So nothing crazy here. Now liabilities, let's see. Accounts payable. This is what they owe to their vendors. So Palantir owing money. It's not a it's a very minute amount, 67 million. Versus all of the other stuff that they have. So most likely it's just the normal rate of I think net 30, I believe, is what people pay within 28 days. But yeah, basically they don't have any issue with paying their bills. And even if it's going up, this can be a sign of their operations picking up, that, oh, maybe because of like their working relationship with Microsoft, they're owing them more and more money. And obviously you're paying more, but it's also necessary for your business to operate. So this is not a bad thing to see this grow. Accrued liability, this went down, so they're just paying this down. Deferred revenue didn't go up too much, but essentially they get money from their customers because they're a software business, but they can't recognize the revenue immediately until whatever the stipulations are for that, delivering services and such. Customer deposits still going up. I mean, yeah, nothing crazy here. As long as we don't see a jump in some random debt, I'm fine with that. We could see operating lease liabilities, non-concurrent, go up just a little bit, but this is just basically them running their business still. It's not like they're borrowing money to survive or some random thing that like they have a line of credit. They have other things that are available for them at their disposal, but they don't need to borrow money as mentioned. So nice balance sheet. Yeah, no issues of bankruptcy or anything. Accumulation of assets is still nice, and showing that they're being prudent and very responsible. From my perspective, being responsible. Some will say there's an opportunity cost for treasuries, but honestly, I like this a lot. And I'm just refreshing this still just to make sure I'm not missing anything. Let's continue down. We should get down to the cash flow statement. Yes, cash flow here. It's nice to see the top down starting with a good piece of net income here. And then as you take things out, you should be fine. So cash from essentially after cash from operations, you're still here positive. So the main drivers here though, so we saw this huge increase in accounts receivable. So essentially as they pay those down, or sorry, as they get paid through, this is money that's not with them yet. Liabilities, I'm just trying to see what the big drivers are. Yeah, stock-based compensation. This crutches, like I mentioned, their operational cash flow. So actually, if they were paying out exactly in cash, they would be slightly operationally cash positive still. Granted, everything stays the same. But something to be wary of. So we're essentially trading off those dollars of safety for giving up equity into the company. So, and if they can outgrow, basically, if the name of the game is outgrowing that dilution in the stock, right? And there's different ways to do that, of course. But improving your business is probably the way that I would want them to do this. So let's do this. Oh, I just saw a funny message here. You guys want a poll, right? I'm not good at live streaming stuff, but engage with my audience. Is there a way? Yeah, start a poll. Let's see. Can Palantir, let's say, hit 35 in 2024? Let's say that. I'm not going to say tomorrow, right? But let's, how do I do this? Start the poll. So yeah, start answering in there. Audience participation. This is my my attempt at being very good at doing multiple things. I kind of hone in, as you can tell. But it looks like we're going to be starting the call soon. I just want to make sure I don't miss it. And for those who are just joining in too, I know that I've been kind of blabbing, but we're going through the Q2 2024 earnings. But we are going to see management's perspective shortly here in about a couple minutes based on the timer here. So what I'm going to do, make sure you guys can just listen in, or you can open it on your own just to support Palantir and show that amount of people waiting. Looks like they already have 1,200 people, and we're one of them. I'm sure a few of you guys are also, but it's still very interesting to see how everyone's reacting. Right now, we're up about 15% in the 27s after being basically pummeled with the rest of the market. But, I guess it doesn't matter when everyone else is also down too. So it's one of those feelings of like, it's not the end of the world if everyone else is also going through it, right? So it's just always interesting to see right now, especially of all the days for Palantir to release their earnings. So, um, previous all-time high. Oh, that's an interesting question here. So we got to go a few years back, essentially. I'm not sure how many of you guys have been in the market, but yes, back all the way here. I'm trying to find the date. January 29, 2021. What a day. So it looks like here they hit into the 40s intraday, but they didn't close out that way. It actually closed out. I'm not very good at this, but yeah. Looks like they hit into the 40s at that. And that's a long, long time ago. And think about the financial looks like we're starting. Think of the financial position that Palantir was at the time. But I guess right now we're going to get ready for earnings because it has just started. Let's see. And I'll be in the chat too. So if you guys want to talk to me through that, I'm going to make sure to get quiet though. But I don't think it's started yet. Let me just ensure I got the volume up for you guys. And my Discord has the desktop audio as well on. So I'll be turning off my microphone shortly. So, but feel free to talk to me in the chat. And honestly, it's just really exciting to see these kind of earnings. And it's well-deserved, in my opinion, because of them actually proving in the numbers, customer count, as well as the revenue growth, 27%. That's basically a huge turnaround. Thinking about when we were at 17% at one point, that was a dark time for a lot of investors who were thinking, well, Carp said 30%, and I get it. We're not there yet, but being able to, first of all, turn on
Good
AIP.
Afternoon. I'm Anna Saro from Palantir's finance team.
All right,
and
I'll
I'd
talk
like
to you guys
welcome
soon.
You to our second quarter 2024 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our third quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We are thrilled to report tremendous results for our business, driven foremost by strong execution in our U.S. commercial business and continued U.S. government business acceleration. Overall revenue growth, excluding strategic commercial contracts, accelerated to 30% year over year and 10% sequential in Q2. Our exceptional results are a reflection of a market that is quickly awakening to a reality that our customers have already known. We stand alone in our ability to deliver enterprise AI production impact at scale. We are delivering these results in the face of an unprecedented enterprise AI opportunity. As noted by Sequoia, the revenue expectations from the AI ecosystem's infrastructure buildout have grown from $200 billion to $600 billion per year in just 9 months. The world is struggling with this huge problem. There's a great bottleneck between prototype and production. The world has also come to understand what we've been saying all along. The standard playbook does not and will not work. It cannot solve this problem. While many companies can build prototypes, the leap from prototype to production is substantial. Palantir has made that leap. Our focus is on deploying enterprise AI in production, solving meaningful problems for our customers. We have the right products at the right time, and our history means that we understand this $600 billion opportunity unlike anyone else in the space. We are uniquely situated, and you see that in our results now. Last quarter, we signed 27 deals worth $10 million or more and closed nearly $1 billion of TCV. One of the most notable indicators of our delivery is the volume of existing customers who are signing expansion deals, many of which are a direct result of AIP. We continue to see the greatest transformation in our U.S. commercial business, evident in the many AIP-driven deals closed last quarter. Our U.S. commercial revenue, excluding strategic commercial contracts, climbed 70% year over year. Our U.S. commercial ACV closed was up 44% year over year and up 19% sequentially, while our deal count in U.S. commercial was nearly twice what it was just a year ago. We maintain conviction in our ability to land new customers and subsequently expand those engagements as we sharpen our focus to taking our customers across the chasm from prototype to production. Tampa General signed a 7-year expansion, deploying AIP to deliver a care coordination operating system where we've helped them reduce patient length of stay by 30%. Panasonic Energy of North America signed a 3-year expansion using AIP across finance, quality control, and manufacturing operations. AARP shared they're utilizing AIP to provide targeted, personalized experiences for their 29 million unique visitors on a monthly basis. Eaton deepened our relationship, leveraging AIP to modernize ERP deployments in addition to finance, sales, and supply chain use cases. Kinder Morgan signed a 5-year Foundry and AIP enterprise expansion with production use cases including storage optimization, pipeline integrity monitoring, and power optimization. These are just a handful of the significant expansions last quarter into production with AIP, and the magnitude of expansion is notable. A major North American industrial company started working with us in late 2022, expanded to a $5 million run rate in 2023, and further deepened engagement to a $20 million run rate this year. One of America's leading hospitals began working with us in 2021, generated approximately $1.5 million of revenue in 2022, over $4 million of revenue in 2023, and is on track to generate nearly $15 million of revenue this year. With regard to landing new customers, U.S. commercial customer count grew 83% year over year last quarter. Bootcamps remain a key go-to-market motion, particularly for prototyping what is possible with AI, but the real opportunity and our unique capability lies in moving from prototype to production with these customers. That is where we are focused. We closed a 7-figure deal with a large wholesale insurance brokerage firm for an initial production automated policy review use case just 16 days after the bootcamp. A leading convenience store chain went from prototype at a bootcamp to paid pilot in 25 days, then converted the inventory management and pricing optimization use case into initial production immediately following the pilot. Our product charisma remains unparalleled. We plan to leverage this combination of bootcamps and pilots with a focus on moving towards high-value production use cases to continue landing new customers. At the same time, we are heightening our concentration towards building deep production-level relationships with every single customer. The phenomenal strength of our U.S. government business shows the power and scale of our enterprise software delivery. Our U.S. government business continued accelerating, growing more than 8% sequentially for 2 consecutive quarters. We proudly received several notable awards last quarter, including a production contract from the Department of Defense Chief Digital and Artificial Intelligence Office, CDAO, to deploy and scale an AI-enabled operating system across the DoD, starting with an initial order of $153 million to support certain combatant commands and the Joint Staff, while additional awards can be made up to $480 million over a 5-year period. This award reflects the criticality of our software in our nation's defense capabilities. Shortly after, CDAO announced a new initiative, Open Dagger, to enable defense tech companies, traditional contractors, and government developers to develop applications and integrations on top of Maven, powered by Palantir, in a contract worth $33 million. We maintain pride in the mission-critical impact of our products and celebrate the long-term strength of our U.S. government business, evident in last quarter's results. Looking ahead, I've never felt more bullish about our business than I do today. We're charging full steam ahead, leading our customers across the bridge from prototype to production, with our ever-expanding product capabilities laying the paths for that journey. I'll now turn it over to Shyam to share more details.
Thanks, Ryan. Our customers have been ahead of investors in markets. Customers choose us not because we're delivering proofs of concepts, but because we deliver proof. Years of foundational investments in our infrastructure, and in particular in ontology, I'll note a widely ignored and discounted innovation, have put us in the pole position. Gen AI has made prototyping incredibly easy and charismatic, but with the same utility of a PowerPoint slide. The journey to production, as the market is now discovering, is fraught and requires a foundational set of technologies that we have uniquely invested in, creating the product pipeline that's needed to harvest economic value from AI. And that's a journey that we were pathfinders on with the U.S. Department of Defense starting in 2018, and one we continue to be the leaders in across both segments, government and commercial today. The bottleneck and the transition from prototype to production is a very hard set of technical problems. We didn't build those technologies eating berries in San Francisco. We had to be on the factory floor, in the foxhole, eating pain with our customers, seeing the secret truths of what does and doesn't work and metabolizing it into product. This has always been the secret of Palantir. It is the anti-playbook. Today's AIP developers will be the enterprise's next generation of builders. Apollo delivers eye-watering agility and responsiveness. AIP deprecates back-end development the same way that hyperscalers deprecated infrastructure, providing the mechanism to bring AI into production in the enterprise quickly. Our builder investments are feeding our product pipeline with our customers, developers in the wild. Compute modules have enabled the integration of our customers' own containerized applications into operational workflows. Today, this technology is powering exquisite missile warning systems in the U.S. government and sophisticated production plan optimization across commercial. And Ontology SDK has enabled customers to build their own pro-code applications backed by Ontology, the critical ingredient for harnessing LLMs in the enterprise. And we pulled all of these investments together in code workspaces, where we have enabled an end-to-end development environment that lets customers treat their business as code. These investments have made us the emerging choice, not only for application developers, but also data scientists. Our platforms have become the fastest place for our customers to develop, refine, and manage not only their models, but integrated offerings that deliver business impact. Once again, history is repeating itself with data scientists as they abandon the thin playbook products of the past. We recently hosted 2 Champions Road events, one in Denver and one in Munich, that pulled together the most experienced and prolific customer developers to share the latest on our roadmap, but more importantly, to surface new opportunities to go deeper. At build.palantir.com, developers in the US, UK, Canada, and India, amongst a growing list of countries, can now access a free developer tier and a library of quick starts, tutorials, and reference implementations for themselves. This developer movement is matched on the government side, whether it's with developers in Armed Forces Ukraine or the US Army. In government, CDAO's recent contract award on Maven will enable us to scale those exquisite capabilities to the DoD enterprise and to bring integrated JADC2 capabilities across space, cyber, electronic warfare, and logistics. The CDAO Open Dagger contract also enables defense tech companies, traditional contractors, and government developers to leverage Apollo and the Ontology Software Development Kit OSDK to develop applications and integrations on top of Maven, all powered by Palantir's Mission Manager. And finally, fresh out of the AIP product pipeline, we are launching a new offering, Warp Speed, to power American reindustrialization. The software playbooks have also failed in manufacturing, and all the founders driving reindustrialization know it. This is why SpaceX built their own ERP. We created Warp Speed from our years of experience on the factory floors, helping customers build planes, trains, automobiles, and even ships. Today, we power production of jet engines, satellites, and weapon systems in the industrial base. Warp Speed, built on AIP, on our industrial AI, and with Ontology, is the modern American manufacturing operating system that reimagines how to bend atoms better with bits. At the dawn of World War II, we didn't have a defense industrial base, we had an American industrial base. Chrysler made missiles, and General Mills wasn't just a cereal company. This is also what our future must look like. It is clear that the nation must reindustrialize and mobilize at warp speed to win. This platform will transform production in the value chains that power our kill chains. I'll turn it over to Dave to talk us through the financials.
Thanks, Shyam. Q2 was an exceptional quarter. Revenue growth accelerated to 27% year over year, exceeding the high end of our prior guidance by 5%, driven by the strength in our U.S. commercial and government businesses. On the back of this strength, we are increasing our full-year revenue guidance midpoint to $2.746 billion, representing a 23% year-over-year growth rate. We delivered these tremendous top-line results while expanding adjusted operating margin to 37%, highlighting the strong unit economics of our business. We also delivered our 7th consecutive quarter of GAAP profitability, generating a record $134 million of GAAP net income, and our 6th consecutive quarter of GAAP operating profit, generating a record $105 million of GAAP operating income. Our revenue and profitability drove a 7-point sequential increase to our Rule of 40 score from 57 in the first quarter to 64 in the second quarter. Turning to our global top-line results. Revenue continues to accelerate. We generated $678 million in revenue, up 27% year over year and 7% sequentially. Excluding the impact of revenue from strategic commercial contracts, second quarter revenue grew 30% year over year and 10% sequentially. Customer count grew 41% year over year and 7% sequentially to 593 customers. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 9% year over year to $57 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 33% year over year and 3% sequentially to $307 million. Excluding the impact from strategic commercial contracts, commercial revenue grew 40% year over year and 8% sequentially. Second quarter commercial TCV booked was $377 million, representing 31% growth year over year. Our U.S. commercial business continues to see unprecedented demand, with AIP driving both new customer conversions and existing customer expansions in the U.S. Second quarter U.S. commercial revenue grew 55% year over year and 6% sequentially to $159 million. Excluding revenue from strategic commercial contracts, U.S. commercial revenue grew 70% year over year and 8% sequentially. In the second quarter, we booked $262 million of U.S. commercial TCV, representing 152% growth year over year. Total remaining deal value in our U.S. commercial business grew 103% year over year and 11% sequentially. Our U.S. commercial customer count grew to 295 customers, reflecting 83% growth year over year and 13% growth sequentially. We generated $148 million in international commercial revenue in the second quarter, representing 15% growth year over year and 1% sequential decline as a result of continued headwinds in Europe. We continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts declined to $9 million for the quarter. We anticipate third quarter 2024 revenue from these customers to continue to decline to between $6 to $8 million compared to $15 million in the third quarter of 2023. We continue to anticipate 2024 revenue from these customers to be less than 2% of full-year revenue. Shifting to our government segment. Second quarter government revenue grew 23% year over year and 11% sequentially to $371 million. Second quarter U.S. government revenue grew 24% year over year and 8% sequentially to $278 million. As Ryan mentioned, we were selected for several notable awards in Q2, which led to the strongest U.S. government bookings quarter since 2022, reflecting the growing demand for our government software offerings. Second quarter international government revenue grew 21% year over year and 18% sequentially to $93 million, primarily driven by additional funding from a partner nation related to our ongoing efforts in Eastern Europe. Second quarter TCV booked was $946 million, up 47% year over year. Net dollar retention was 114%, an increase of 300 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q2 of last year. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. commercial business over the past year. We ended the second quarter with $4.3 billion in total remaining deal value an increase of 26% year over year and 5% sequentially, and $1.4 billion in remaining performance obligations, an increase of 41% year over year and 5% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $254 million, representing an adjusted operating margin of 37% and marking the 7th consecutive quarter of expanding adjusted operating margins. Q2 adjusted expense was $425 million, up 4% sequentially and 7% year over year. We continue to expect expenses to ramp through the back half of the year as we invest in the product pipeline and hard technical problems in debottlenecking the journey from prototype to production that Shyam just outlined. We remain focused, however, on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and operating income. In the second quarter, we generated GAAP operating income of $105 million, representing a 16% margin, our 6th consecutive quarter of GAAP operating income and 5th consecutive quarter of expanding GAAP operating margins. We generated second quarter GAAP net income of $134 million, representing a 20% margin, our 7th consecutive quarter of GAAP profitability. Second quarter adjusted earnings per share was 9 cents, and GAAP earnings per share was 6 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 64% in the first quarter, a 7-point increase to our Rule of 40 score from the prior quarter. Turning to our cash flow. In the second quarter, we generated $144 million in cash from operations and $149 million in adjusted free cash flow, representing a margin of 21% and 22% respectively. We expect cash flow to ramp through the back half of the year in line with expected timing of government and commercial year-end collections. Through the end of the second quarter, we repurchased approximately 1.2 million shares as part of our share repurchase program. As of the end of the quarter, we have $973 million remaining of the original authorization. We ended the quarter with $4 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2024, we expect revenue of between $697 and $701 million, and adjusted income from operations of between $233 and $237 million. For full year 2024, we are raising our revenue guidance to between $2.742 and $2.750 billion. We are raising our U.S. commercial revenue guidance to an excess of $672 million, representing a growth rate of at least 47%. We are raising our adjusted income from operations guidance to between $966 and $974 million. We continue to expect adjusted free cash flow of between $800 million and $1 billion, and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Thank you for participating in our earnings. We founded this company to be a ray of light to America and our Western allies. And in doing so, we built software for the institutions as they ought to exist, not as they do exist. And of course, the whole playbook around building software, building institutional software, building software that would be transformative, and especially in the current context around AI and large language models, flew in the face of everything that people have been taught to know about enterprises, what makes them work, how they can transform themselves, what software products would be valuable, what software products people would adopt, how would they adopt them, how would you get value from analysts, users in the software context, how would you transform manufacturing, how would you use, in the current context, large language models, not as an act of self-flagellation or something that just makes a small group of people richer, but in a way that you can extract value in existential life and death contexts like the battlefield, or in institutional or commercial contexts like the transformation that is happening all across America and in some other countries. And in the face of this, we made bold claims that looked ridiculous to many people. One bold claim was These large language models will not work without foundational software. They will not work without a means to process them. They will stay something like self-pleasuring or PowerPoints, which is the purveyor, which are sold to institutions as a way of deceiving institutions from transferring their high value revenue to other enterprises without actually transforming themselves, which were addictive and thin and led to dysfunction in enterprises, much like their allegory in the political world of wokeism, became slower, dumber, not able to actually produce results. And we built the infrastructure you need to move from self-flagellation, PowerPoints, and prototypes flawlessly into production. Production meaning your enterprise gets faster, it runs better, the margins are better, the people inside the enterprise become more valuable. Your tribal knowledge in your enterprise, the knowledge which differentiates you from all other enterprises, becomes truly valuable. It becomes a weapon in your hand, whether that weapon is in the commercial context to make what you know how to do better than anyone else, work better than anyone else by making engineers better, by making the workers more able to do things engineers would be able to do, by treating your company as a portfolio as opposed to dots on a PowerPoint. We believed, and the numbers now show that we were right, that by doing this, we could give America and its allies a structural advantage in the commercial area, which we have seen, and our numbers prove, and arguably even more importantly on the battlefield, which we can't talk as much about, but is the absolute most important area where America and its allies have to have dominance and leadership, that we had a structural advantage. And what is gratifying about our this quarter, and in general about what we've done, is not the banality that we were right and the playbook purveyors are obviously somewhat laughable. It is that you can build a great business, be aligned with America and the West, that alignment will make you stronger and better, that your software products will actually be products and not PowerPoints, and that you can actually build something with the best people in the world, the best investors in the world, that will lead to structural advantages. Of course, all along the way, we had many, many doubters. We had people that thought we would never be profitable. Now we are over 7 quarters in profitability. We thought people that we would never be able to grow the revenue. We'd never be able to reaccelerate the U.S. government because of it's often opaque, but we asserted that product superiority would overcome many of the vicissitudes and difficulties of working with the U.S. government. Witness reacceleration. We asserted that our products were the precursor to making LLMs valuable, that we would productize how you create this value, much the way hyperscalers, as Shyam had mentioned, had productized other technical issues, and that we would give that productization to our customers. Witness our 70% after SPAC quarter, the third quarter in the row where we're growing at what amounts to a ridiculous rate. And there's witness the reacceleration of our global business ex-SPAC to 30%. Witness our backlog. Look at any part of our business. Then it is like, well, how are we doing this? Is a really long and interesting question that people will dedicate their academic careers on, but we do not have time to address, and it may not be learnable for everyone, but we do it. And the single most important part, however, of this is that we are going to play a determinant role in making America and its Western allies the dominant force again in this world. And because of that, the best times for this company are not in the past. I would say the single most interesting thing about this quarter, if you had to reduce it to one simple fact, after 20 years, after changing the way people do intel, after changing the way the battlefield works, after changing the way people procure software, after exporting our platforms to our allies, after punishing our adversaries, after building a commercial business, after DPOing, after seeing it all reaccelerate, the best times for us are yet to come, and we are planning to just take our energy and run this business as a business of which we are, which is our owners. We are owners with a very long-term focus for the best interest of our country, our allies, and our Palantirians and our investors. And so I'm very thrilled to have you participate in this, what for us means historic earnings. And last not least, the world is on the precipice of what could be a very severe set of violent interactions in the Middle East. And it goes without saying that at Palantir, we know where we stand, and we are very much supporting America and its allies in the Middle East, including Israel. Thank you.
Thanks, Alex. We'll now turn to a few questions from our shareholders before opening up the call. Axel asks, what is Palantir doing to be different from its AI competitors, and what is the company's plan to stay competitive?
Thanks, Axel. Well, all the value and where the market is completely bottlenecked is on that transition from prototyping to production. And that happens to be the place that we are most differentiated. That differentiation is built on more than a decade of deep technical investments, technologies like the ontology, OSDK, the primitives that we have that permeate the platform, security, functions on objects, actions, write back, machinery, automations, and a deep product pipeline that really is focused on addressing this very problem, on this transition from prototyping to production. And I think when you think about the ChatGPT moment, it so very clearly invalidated the thin product playbooks of the past. I think this bottleneck is doing that same thing to AI software. It is so easy to create an AI prototype, the equivalent of effort of making a PowerPoint slide, but it's actually very, very hard to get that in production, probably 10 to 100 times harder than traditional software transitioning to production. And therein lies our entire opportunity in the market. That's what you see with the expansions that have happened with Panasonic Energy and Tampa General, and that's what you frankly see in the numbers of this quarter.
Thanks, Shyam. Our next question is from Jacob, who asks, we understand why Foundry has become the operating system for the modern enterprise. How does this change with LLMs?
Well, the market doesn't need point solutions, even if it's slightly addicted to them, and our customers can't solve their business problems with hyperscaler infrastructure alone. They need a system that organizes and orchestrates the interaction of their physical business with their technology, with AI and LLMs. In the same way that your operating system orchestrates and organizes your hardware with your applications. And in the same way that your operating system gives you application development frameworks like AppKit for Mac or WinUI for Windows, Palantir's OSDK and ontology is that application development framework for the entirety of your business that allows you to treat your business like code, leveraging the primitives that we've built that extend LLMs throughout your enterprise.
And just as a point that, we've already mentioned, but, a lot of what we're doing sounds complex on the outside, but what is not complex is the customers already understand they need it. So it's like a lot of our actual advantages, the customer is way ahead of investors, way ahead of people investing in this. And we're way ahead of our customers, and we have distribution. So typically in a revolution, the revolution comes from like small companies somewhere, but this revolution is coming from being ahead of where the customers are, and the customers are years ahead of what analysts and others think. And we are actually monetizing simply the fact that we're ahead of our customers and the years ahead of everyone else. And all of these things that Shyam was talking about how does an ontology work with an SDK? How does that work with an enterprise? How would you actually use a large language model in a way where it's differentiated, meaning you use the right large language model at the right time, under the right conditions, in the logic, meaning in the way the business understands itself, within the context of the security and security logic of the business. Those things are largely not understood on the outside, but every single person in government who's trying to use them or who is using them, every single customer who's buying this, witness the numbers, they either understand this overtly or they understand that nothing else works. And in many cases, they simply understand that nothing else is giving them any value, and they're increasingly getting tired of paying for things they either don't use or they shouldn't use.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Look, I think historic quarter for Palantir, so congrats. Does it feel out in the team, does it feel like you're starting to now, in terms of the conversions from the boot camps to deals, it's starting to accelerate? It seems like that based on the actual quarter. But can you just give some granularity there?
Yeah, I can give. First of all, I think the numbers speak for themselves. We closed 27 deals worth more than $10 million or more, $1 billion of TCV in quarter. And so I'll start with the numbers because they speak for themselves. Boot camps are an important part of that motion. We're seeing them expose customers to new opportunities and new potential customers to opportunities. That being said, it was, as Shyam was highlighting, what everyone underestimates is the immense challenge of deploying enterprise production AI software at scale. And so we're very much focusing our energy and going deep in production with those customers. And that's the massive opportunity before us. And that's where we're running at full speed. You see that in the numbers. You see that in the customers' reaction, who are blown away by the impact we're having for them and demanding more and more in that direction from us. And really where we're focusing our energy.
Maybe a slightly orthogonal, indirect way of answering your question is, if you take the battlefield where these things, the few places these things are, LLMs are in use, or the battlefield where other forms of AI are in use, and you take U.S. commercial, what you're really seeing is a very tight learning circle. What works, what doesn't, why? And that's very different than places that aren't working. And America has many businesses that are very strong, and they're very, very agile, so they're learning very, very quickly. And then, much like people watching this call, they're like, oh, okay, this is working. There were leaders like you who predicted this would work, but most people actually, our customers, want to see it in production and then say, okay, well, why is this working? And that's a separate, and what's very special about what's happening now is you have more and more people who are like, okay, I know this works. I want to understand exactly why and how would I expand it, and why is nothing else working? And so that's leading to a very different motion. I think it's going to lead to a very different way of looking at our company in all areas, including financial areas, because it's like when you're making assertions, you need avant-garde innovators to look at it and say, okay, well, this is something that's not quite there, but I think it could work. And we're very much moving into the phase of, yeah, this is working. Our adversaries know this works. Our U.S. military knows this works. People on the ground knows this works, and it's a very similar in U.S. commercial. And that's what's generating the 70% number that is kind of, jaw-dropping. Like, the jaw-dropping numbers are being generated by, okay, this works. How do I expand? And explain to me how it's working. Can we expand these things? And by the way, our innovation is also because we're like, okay, we see this works, but this could work 5 times better if we had different kinds of innovation that no one else has.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thank you, and good afternoon, everyone. I'm going to try to squeeze 2 questions, as usual. So the first one, I'm curious about Warp Speed. What is it? Is it like a new system that allows companies to build their own ERP system? Is something that runs on top of your existing old school legacy ERP system? Or is Palantir creating like a solution that is ERP? Like a little bit details about that. The second one is not just Warp Speed, but also all this American industrialization. GAO posted a report recently where they've said software and implementation are the 2 biggest barriers for the US to be able to produce the weapons that they need. What is the biggest barrier or like hurdle for the US primes, or especially the old guard primes, to come to you and let you help them reindustrialize, produce, and get back on track on these like multi-billion-dollar contracts they have? Thank you.
Yeah, thank you, Mariana. So with Warp Speed, it really is we conceive of it as an operating system for the modern American manufacturer. It touches not just ERP, but also MES, PLM, it's PLCs, so it's interacting with the factory floor. And we think there's an opportunity to reimagine this. I think the kind of congenital defect for most of this software, it was designed historically in the 70s for the CFO. Why would you do that? If you were starting over today, you would build software that was designed for the head of production, that was focused principally on production, and then how you integrate both your extant legacy systems and use Warp Speed in place of the investments that you haven't made. I think the big opportunity, so if you go to the big legacy manufacturers and you say this, it sounds crazy. They've made a bunch of historical investments. They're not yet convinced or even aware of the fact that the legacy software playbook doesn't work. But if you go to new manufacturers, the one that are powering the reindustrialization of the country, they all know this. They're all alumni of the Tesla SpaceX world where they built their own systems from scratch, principally because the other stuff doesn't work at all. And they also know they can't afford the 300 engineers it would take to build this completely from scratch, or the time it would take to do that. So there's this very powerful role of taking AIP, building the applications on top of it, using the OSDK, and delivering the integrated suite of applications that are also malleable to the business. Because I think one of the other key insights here is it's not actually believable that the same ERP manufacturing system that you use to build rockets is what you would use to build rackets. And how do you, what is the right way to think about grafting the software around the manufacturer in a way that gives them alpha, not just creates a huge amount of services for these system integrators? You know, we live in a world today where it's $1 of license for $9 of implementation that never seems to quite work. Who is really happy with the implementation of these systems? Which ones are even happening on time? Who can say that those systems didn't fall apart in 10 seconds when COVID supply chain disruptions happened, right? There's an entire opportunity to reinvent this now, and I think the bolus of energy around national defense and reindustrialization is catalyzing this opportunity.
Well, and you know, Shyam's leading this charge, but the reason it, I think, is likely to work is because not just America, but every allied nation has the problem that they cannot get their military production to work. So your question is not really two questions. It's what are you building, and from my perspective, and why is it likely to work? And they're very linked. It's likely to work because in every single Western country, when you talk to these leaders in private, the conversation I often have with them is, what could we possibly do to make manufacturing work so we would actually be competitive on the battlefield? And the answer to that, for these countries, really is reimagine how you produce. And the people who do it are going to be people who are alumni of the companies that have actually built companies correctly. Call it the Palantir alumni, and people from the SpaceX network are really the only people who have done these things. And the first thing they want is a software program that will allow them, including with large language models and AI, to build the way you ought to build. Ought does not mean build near term in the interest of your CFO so you can IPO quickly and build something that's fake. It means build something that is real, build something that's sustainable, build something where the production is actually production of a product. And that aligns very squarely with how Palantir wins and how we build things. And that's why this is a super important thing we're working on.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end today's call?
Well, again, thank you for your support. That we've had good and bad times. This is a super important time for Palantir because we have proven to the world that what we do is quantifiable and real. We are focused on growing this company to be much more impactful, much larger, and much more valuable. We appreciate your support, and we know that many of you also support us because you realize that we are value aligned with your values, which means fighting to make the West a stronger and better place, including on the battlefield. And that battlefield may be upon us now, and we appreciate your support and do what you can to help America and help our allies. Thank you.
Thank you. That concludes Q&A for today's call.
Right. Turn on the microphone again. Got to rest my voice for a little bit here, but yeah, another earnings call down now, Q2 2024. And for those who are just joining or joined in the middle before, they heard me talk. Essentially, we covered what was happening last quarter, what were expectations, and then what actually happened when Q2 came out. Some very exciting things, I would like to say. But now, after the earnings call, we actually have the presentation loaded up now. So we will review that, and I'll give my thoughts briefly also on the call. You know, as always, Alex Karp still talks about the mission focus of Palantir, the more philosophical tones, right, of what the company does, what kind of value they're bringing, and, you know, really coloring the picture, I would say, and bringing more vibrancy around the, you know, I like just to hear the numbers, honestly, and that's my personality. But for other folks, it's important to know what's happening with their business in regards to, you know, following their mission. And the big thing too, especially with government growth at 24%, which is a really big jump for them, I would say, for that mature business. his perspective on the global environment, especially with the Middle East, and continue to bring. And I know everyone has their own 2 cents on what they believe they should do, but as a company at least, and for Karp and what he says, being aligned with the United States and their allies in the Middle East, as well as specifically calling out Israel. So very important stuff there, as well as for the question. Well, of course, they talked about the different financials happening, but I think, I'm not sure if I heard it there, but I believe they bought back some shares as well, 1.2 million. Not that, well, it's a lot of money, I guess, for a normal person, but in regards to the float, 1.2 million shares is still something, and showing how they want to use their cash. They answered questions regarding what they're doing now, as well as what they're going to expect in terms of growth. One thing that really stuck out to me was the question around Foundry and what is that relation? Because, the main focus has always been right now recently talking about artificial intelligence platform, AIP. And then we hear about maybe Apollo once in a while, maybe FedStart. And Foundry, that was the bread and butter child. That was the poster child of their business before AIP. So I think that was actually a very valid question to know what is happening with Palantir's business, especially in regards to Foundry. And essentially, they're just saying it's still part of the program. They're making sure that so at least I'd probably have to refresh myself on it exactly, but in the whole terms of where it lines up against their products. So AIP is a layer that's essentially allowing them to leverage LLMs, but the actual analytics of your company are still being built upon Foundry, and the way that you look at your business, the way that you look at your data, and ensure that. But it's like different layerings of Palantir products. So it's not like it's going away, but definitely it's not being talked about or the forefront of things that it's the sexy thing to talk about and get the new customers in. Now, the questions from the analyst, when Dan Ives asked, I think he asked a good question to find out, are boot camps working? And they didn't really answer the question, just to be honest here. We didn't get specifics. But you could even make the argument that, if it's working, we don't really need to know, right? And in the earnings presentation, they do have a slide of, I think it's like the first slide here. They have 1,025 organizations, so AIP boot camps with 1,025 organizations, just so there's a differentiation there. But they didn't really answer the question in regards to like what specifically is happening. I know people are curious about conversion rates, but they still talked about the big amount of deals that they got, 27 deals, more than $10 million. And that'll probably be a slide on here, actually. That'll be a nice little specific slide. Oh, well, either way, we'll get to it there. And then we got to Mariana's question. I think a lot of folks are also interested in Warp Speed because it's basically announcing a new project or product. And this one's really focused on the industrial side of things. And we know Palantir, in recent times at least, they've been really focused on the industrialization aspect of the United States. And, it's mission focused for them as well, because it's aligned with how the United States government is essentially going to arm themselves, right? If we have a good industrial base, it doesn't necessarily mean building a tank, right? Everything from the industrial base of how you're getting your resources to building out any kind of, say, plastics manufacturing, right? Things can convert over to, say, a defense application, but also just your industrial base of being able to produce the things in a global environment where if something goes wrong in a country that's known for building something, how can the United States or its allies react to that and be able to stay on top of that? That was just something really interesting that the Warp Speed product there is going to be focused on and building. Essentially, it sounds like it's more building blocks for these kind of companies. Because as Shyam Shankar said, like, if you're going to build out rockets, do you need the same exact thing that's building rackets, or I'm assuming like tennis rackets? So I think that's a very good analogy there to do the comparison. Now let's go through. And the last point there for the earnings call, Alex Karp still has that support for the retail investor. Kind words, of course. Obviously, I think the results speak louder, but it's always nice to know that we're still being remembered here. Now everyone's always going to bring up stock-based compensation, but essentially it's he acknowledges that there's a lot of retail investors, and even if it's at some expense of their bottom line today. He knows that they're a mission-focused country or company, and that a lot of investors also do have alignment with the mission of Palantir. It doesn't have to be 100%, right? There's some level of, things that we can disagree on or think there's a better way. But essentially, they're Western focus, especially with the United States and its allies. And, that speaks loudly to how they're going to run their business, right? They're not going to sell their products to Russia and China. And for good reason, right? If they believe it's that powerful and dangerous, then why would you kind of just hand it over? So it's just nice to get that reassurance once in a while. So another, I think good earnings call. Nothing super exciting. We didn't get to hear any amazing hints or tidbits that we weren't expecting. So they did like to focus on the growth aspect, but it wasn't a bad call either. So let's just get on to the presentation, and let's see here. All right. So we already covered the big highlights already. So just for the quick TLDR, great revenue growth, great customer growth, customer number growth. Even for the government side, 24% is much more than I expected. And then obviously the poster child right now is US commercial growth. So, and the big thing too is that they performed over the expectations, or at least the guidance that they provided of 22% by, they did 27%. So that's huge. And then also for guidance that they provided, it looks like they're going to be trying to go for around 25% better for Q3. And if we take into account their past, then they've appeared to at least sandbag this. So nothing's assumed, right, if they will overperform on it, but that's just based off what we've been seeing. And then continued great metrics with their profitability, ensuring that they have S&P eligibility, as well as their operational cash flow, that they're able to bring in money, and there's no issues with bankruptcy, as well as the interest accumulating. So they start off the presentation here with AIP, as well as kind of those anecdotal evidence. So I already referenced this, but they did talk about a few deals in the beginning of their webcast. And, it's nice to hear about the big customers, and they're re-signing, right? And they're expanding the contracts. I'll have to rewatch the video for the specifics, but I'll include that in the Q2 2024 review video that I'll put out later today. And then prototype to production. This is also another main theme that they talked about on the earnings call, right? Where is Palantir in regards to other AI competitors, and what's the market they're serving? And really, they're saying that they're bringing prototypes to production faster than anyone else. And there's kind of these examples here. So these are anecdotal, right? So it's not necessarily an average across the figures, but look, 16 days later, they got a 7-figure 2-year deal signed, enterprise-wide contract in discussion. So that's huge. Another boot camp here, less than 6 weeks later, so a little bit longer, but they got a 7-figure deal here signed. And then also 25 days to paid pilot, and then conversion. So here we got a little bit of an intermediate step, right? They still had the chance to do the boot camp. They had the chance to get their hands on the software, but they wanted to pilot it still. And in the end, they get a conversion here. So pricing optimization, production use cases, and it looks like they're moving their way towards a contract. But essentially, they didn't answer Dan's question on actual scale of the conversion rate, but at least we still have the anecdotal evidence. And they did this last quarter as well. And as mentioned in the beginning, they brought up some big partnerships. I know industry is kind of the big theme of things right now on Panasonic Energy. And, a lot of people like to talk about Tesla too when they talk about the batteries here being produced. Tampa General Hospital, healthcare is a huge market for Palantir. The use case makes sense, right? If you're talking about security, as well as real life threatening things that can happen based on the data. Considering they've worked strongly with the military in the past as well, they know what life and death can mean for the data that they're that's working in their systems. Starlab. So this was actually announced a while back. Essentially, they are a big partner here on the data side and ensuring that things are going to work out well for in space as basically the new quote unquote International Space Station is being built out. And this is actually more recently. So this is like the humanitarian, anti-human trafficking. So more things that are dealing with real life situations. And then they like to highlight the deals of the past quarter that caught the attention. Now, these aren't new for us because we literally cover these as soon as they come out. But $480 million contract, CDAO. And then let me see here, deploying mission manager infrastructure Big Tent software integration. $33 million contract for the CDAO as well. Yeah, it just keeps adding up. Now, for the financials, the one thing, I think I missed the number, but net dollar retention was what I was interested in. But these graphs, love to see the trending analyses here all the time. GAAP net income, like I mentioned in the beginning, there was a stepped up basis, kind of boosting it up. But ever since then, they are just continuing to increase this. And, just from distance of the lines, we had a pretty heavily increase as well here, nominally at least. So if you go by dollars. Now, I'm not expecting them to supercharge us, or they don't need to do that. Just keep it positive. And I sound like a broken record, but that's truly what I feel. GAAP operating income, their business makes money. They don't need the interest, right? But the interest income is there for them while they have a huge stack of cash, propping that up, right? From $105 million here up to $134 million. Now, if we keep going further, rule of 40. So this is actually based off of, the margin as well as their revenue growth. Hence, this is a bigger number. So it's showing that multiple aspects of their business are continuing to grow. And people are, they're basically just saying by these industry standards, we're doing really well. Considering what? It's a rule of 40 and now they're at 64%. Now, I don't think it's necessary for them to continue exploding this per se, but it's a good kind of side indicator as well. Like if their revenue just keeps accelerating, this should be out of the park, way above 40 at some point. Well, it already is way above 40, but even further. Now, here's where we get the breakdown. So when you can see the comparisons, right? U.S. commercial is still their bread and butter, 55% here. But 33% overall for their commercial revenue. So if you take international into account, it's obviously not as sexy, it's not as fast, it's not as exciting. However, it's still getting a 33% growth rate here overall. So, and that's a big part of their business for the quarter, $307 million out of the 678. So we're basically almost at half commercial at that point. Now, government-wise, so yes, the business still technically leans towards government, and no one was expecting this, honestly. I wasn't expecting it. 24% growth, but you could say there were clues regarding the contracts that they signed and certain initial amounts that could have flowed in for the particular quarter of Q2. So there were clues, but we didn't know for sure how much, some of them we knew how much, but it still has a reliance on what's the other government business looking like, and is that baseline still being kept up, where the additional dollars flowing in actually can go on top, or are they just filling the gap, right? So it's important to keep that in mind if you don't want to get too excited about it. But I'm way happier to be pleasantly surprised than to have high expectations and nothing actually then it falls short, right? So this is way better in my opinion. And then 23% overall for growth. That basically means international is doing fine, at least in relation. So we had 302. Now you have to remember that the baseline though, so U.S. government's baseline is 225. So that means international government's baseline was only 77. 75 plus 2, 77. So the rate though is still looking good in my opinion. Now this is why they bring it up. 24% here. 8% quarter over quarter. It's driven by their momentum in the Department of Defense and favorable deal timing. So we talked about that earlier with the deals. Now, total revenue growth driven by continued acceleration of our U.S. business. I like these little tidbits here because it makes sure we have that slight context. It's already handed to us on a platter, right? But if you're just skipping around, you know exactly why it's happening. Now, total revenue excluding strategic commercial contracts, they have to say that specifically, but total revenue growth excluding this is 30%. So it looks really nice, hitting 30% technically, right? I have to see exactly what the strategic commercial contracts are because, it cuts out a good chunk here when it drops down to 27% for revenue growth, but still 30%. When you take that little bit of exception, it's a nice number to tout, I'd say. And of course, they'd like to show this as an individual slide. Now, continue to invest. So this is basically showing that they are improving their products. They're able to invest in themselves, and they're keeping their margin strong. They're able to, as they said, we continue to invest aggressively in AIP and the US while driving operating leverage at scale, meaning they're spending money on the things that matter. And obviously, if something is not as strong of a business or they don't foresee that being worth the money to invest into, they're not doing it. And I'm cool with that as an investor. It makes sense, right? Some people say growth at all costs, but I'd rather have you be smart about it. It's more sustainable over the long term. And for a business like Palantir in this environment, yes, they have a premium and high multiple. But with high interest rates, anything can go wrong if you don't have a sustainable business. And we've seen that with other companies. If, say, a black swan event happens, maybe a bunch of lawsuits come in. I'm not talking about CrowdStrike, am I? Well, I'll let you guys figure that out. And then also U.S. commercial customer count. This was the big number they wanted to show off. So the thing, though, to be weary of when it comes to to customer counts in general is the year-over-years are going to look really nice because of the low baseline. Now, eventually, we're going to get to a point where we're at the higher baselines. So it's going to be, quote unquote, harder to hit the big year-over-year growths. And even Alex Karp kind of talked about it in his letter. At one point, only a few years ago, we had basically something in the teens of the amount of commercial customers. So when you're working off a baseline like that, yes, it's small. And if you do look at this consecutive quarters, right, plus 22, plus 19, that's because the baseline's getting bigger. But either way, I think it's still strong to see the year-over-year growth. And if we're seeing revenue, it's nice. So like here, the 19% jump is actually from 221 to 262, and that's 41. Now, 262 to 295, as you can tell, it's a lower percentage, and it is a higher baseline. So it's kind of a double whammy here where you only gained 33. So yes, in consecutive quarters, it doesn't look as nice. So it's something to be weary of. But I guess we'll enjoy it while the baseline is still pretty low for the year-over-years. Going further down, so they like giving a dedicated chart for U.S. commercial, but if we go by the whole customer count, it looks like they did not hit the 600. I thought they would easily do it, but it looks like not, right, in this case. And that's fine. I mean, as long as the dollars are flowing in, if there's not a bright spot in one area, like the brightest of all spots, like revenue outperformed, I'd say, much more than expectations, and government, specifically government, actually. So it's not a make or break, I'd say, that they didn't hit 600 customers, but I think it was a nice mile marker to say that this is accelerating. But to see them truly accelerating in the customer count itself, you could technically say it remains to be seen. But this is still growing, and obviously it's not completely slowed down, so it's fine. And if you go by just the commercial customer count here, that's 40 customers. So yes, there's 33 from this one in total. So that means 7 for international. So it's okay. It's okay at that point. But like I mentioned, the consecutives don't make it look as nice. So, but here's where a lot of people are excited too. And this is kind of how they answer the questions about are boot camps working? So it's anecdotal, like I said. It's not a widespread kind of percentage, say that this is the many deals closed across all boot camps. I think it's also not an easy way to measure because they do multiple organizations with multiple boot camps, and defining a boot camp size, there's probably some that are very small, some are big, or maybe some have the same amount of people, but it's different numbers of organizations, right? So maybe it's a good thing they're not breaking those out specifically because it's not actually clean to do so, but that's just me speculating. But for Q2 2024, they closed at least 96 deals of $1 million, 33 of $5 million, and 27 of $10 million. So as mentioned with closing deals, this doesn't necessarily mean this is 1 year's of revenue, right? This is the deal size that they closed during the quarter. But these are some of the biggest numbers we've seen, especially on the higher end of the deals. I'll have to do some exact comparisons. I believe I have a chart for multiple quarters, but I'll include that when I create a summarized video for this. So always nice to see. And then the safety aspect of Palantir, $4 billion of cash. We finally hit that milestone specifically. A lot of it, as for those who were here earlier in the call, we actually saw that they increased the amount of money that they put into treasuries, the ratio of their cash. It should be at the very, oh, it's not at the top here. Oh, it should be on this one. Balance sheet right here. So as you can see, technically by the end of the year last year, it was 831 in cash, down to 512 in cash. However, you can see their increase of treasuries or marketable securities as they're here, but they're mostly in treasuries, 2.8. So this is up basically $600 million, while the cash is technically down only 300-ish million. And you can also see that they have some accounts receivable, so their dollars are owed to them by their customers. But that's the big thing, that they're actually putting more percentage of their cash into the securities, meaning, so you can look at it at two ways, a double-edged sword. They don't need to invest that much money, maybe because they don't see the opportunities, but that can also be good because they're just really waiting to spend the money on what matters, or what they're already spending is more than enough to accelerate the growth that they're expecting now. So there's always multiple ways to look at it. But basically they have a huge hoard of cash. No, there's no reason to be scared of going bankrupt or anything of that nature. And it's a nice prop up to their GAAP profitability here. I know there's a lot of people who might have different thoughts on that, especially if interest rates change, but we'll leave that for another day. Probably another few months, if anything. We'll see what Jerome Powell says. Now, the other big aspect I think people are enjoying about the earnings. So first, the revenue is nice, and then the customer count keeps going up, but they keep guiding better, right? And we're talking about the percentage of the guidance of growth. So not necessarily what actually happened. So Q2 2024, we had 27%. They guided for 22%. Now for Q3, they're guiding for 25, almost 26%. So we'll see what actually happens for Q3. Full year 2024. This is actually an update to last quarter. So it went up 2% on the high end versus the other high end. So basically, there's nothing really to be mad at Palantir for in this case. They're showing the turnaround and growth is continuing for them, as well as they are guiding better expectations of growth, and they have a history of beating the expectations that they set for themselves. So that's why I think, I think I closed Webull. Let's see. Yeah, so it's actually tamed down a little bit here since the call, but I think a lot of people saw that headlines in the beginning, up being 18% at one point. Hitting into the $28 range, I think even to the 29s at some point, but essentially with the after hours, there's a lot of excitement. Keep in mind though, this is not during regular trading hours. So, technically there could be big buyers and sellers that were not participating in this market action. And we'll see what happens in the pre-trading, the pre-market tomorrow morning. That'll be interesting to see if this will be maintained at all, or it'll be even better than expected, or possibly even just go away, right? And possibly the macro environment too just continues to put pressure on them. But even if you're actually looking at this is actually my own watch list, but there's a lot of high multiple stocks here, so it's not the typical slow growth investor you would see. Yeah, it looks like some after hours are green, but not huge. So we'll see how tomorrow ends up for Palantir, considering these results are out, and maybe I'll just end up being the same thing. So that's the earning presentation. There's obviously the appendix for the details there, and I think I forgot to check net dollar retention. I heard it mentioned on the right in front of my face, 114%. That's very good. I think it was 113 last time. I like that. So this one is even better, showing that they're continuing to expand the revenue that they're getting from existing customers. But the forewarning, though, is that with the new customers coming on, they're not included into this because there's a look back period, right? You can't compare your look back unless you've been in the back, right? And you've increased your spending from a baseline. So this is awesome. I don't need to see this balloon up into the like 130s yet. But if it continues to even just stabilize or continue to grow slowly like this, I'm pretty happy with 114% in net dollar retention for the company. It really speaks loudly to how strong Palantir builds a relationship with their customers. And, you know, with these customers, they're very big corporations, right? And like, let's say, for example, Tampa General Hospital, it's a widespread health system down in Tampa, Florida. And then you got Panasonic Energy, of course. I believe this is the North America arm for Panasonic. And being able to tout these different customers. And we know there's a way bunch more, right? And we know their government customers, especially in the military side, are huge. So net dollar retention, even if it's not the make or break and they're not touting it anymore like they did in the past, at least it's not completely gone from the presentation, because technically they don't have to give that out. But since they've already given pieces to investors like us, it's nice for us to continue tracking what their net dollar retention is. So, but yeah, I think that's all that we'll cover today for the earnings presentation. Keep an eye out for my next video. It's going to be a summarization of not only the presentation itself here, but that will cover a lot of like the pictures and everything, but also the earnings call itself, some of the interesting tidbits from that, Alex Karp's letter, and just the overall vibe of this earnings, because I think this is probably one of the best earnings in a long time, especially in relations to their business. Obviously, this is the biggest revenue they've had. It's the biggest growth they've had in a long time, at least, and the trending upwards, as well as the excitement in general. And it's just funny, this is all happening during market turmoil and a lot of downward movement, let's just say, for specific companies that have high multiples, but even just the overall market in general. So I appreciate you guys. Thank you all for joining. I know this was a long stream here, but just keep an eye out for the next video, and I'll see you guys in the next one. Thank you.